Welcome back to Voodoo Support and Resistance Indicator. In this video I will tell you more about the EMAs, the moving averages included in the indicator. To ease up the view I will turn off the Fibonacci extension lines, everything not to cover our picture. As you can see, Voodoo is plotting two types of EMAs. All of them can be changed in inputs, but I will talk about it near the end of the video. By default, those EMAs, those moving averages actually, are to provide you a not only information based on moving averages or where the market can be heading, but also a good tradable setups and risk management. To make things short, this orange line is 200 EMA. The gray one will be 200 simple moving averages. So this is exponential moving average. This is simple moving average with the same period. Both of them tend to provide a good support and resistance zone between them. It's marked in orange. The red or the green line here, it's 21 exponential moving average. And the next line, this thinner gray line, it's 33 simple moving average. Those two provide also a good support and resistance for local price, and all those EMAs are mostly used in trending strategies for catching some trending movements and finding a good setups over them. More importantly, the 21 EMA will change its color and the color of the zone whenever Voodoo detects a good setup to enter. So whenever it's red or green, it's good to enter position based on it. When it's gray, the field is gray. There is no trade to be done there, and you have to just wait for a new setup to form. Those green dots are the entry dots. Whenever you are entering a position based on one of the strategies for moving averages, those green lines will provide you an entry point whenever you can automatically enter the position. And those orange dots are the stop loss level dots, which provide you a risk management and provide you an information about possible stop loss size. So an example, if you're entering a short position here, your stop loss should be here. It's simple to read and really easy to apply to your trading. When the 21 EMA is green, there is a long position to be entered. Whenever it's red, there is a short position to be entered. So this is the explanation of the moving averages, and we'll go to inputs to see what we can do with them. As you can see, by default, you can switch them off if you don't like them. You can change the source of the moving averages. Okay, so by default it's open, but to avoid like reprinting, and if you want to base some alerts of it, you can switch to close. It will wait for candle to close to form the moving averages. You can also, for each moving average, you can select the length of it and also a type. So you can switch between exponential moving average and simple moving average. So with this tool you can actually adjust all those moving averages to suit your needs. Also, you can switch off the entry and stop loss levels if you're not using them to clear up the picture. And here you have a stop loss offset and pips. This is the term brought from Forex because my main trading background is Forex trader. And 1 pip is 10 points, and 1 point is the last digit from the pricing of the current pair or traded asset. So by standard is by 3, but you can easily adjust it. And how to do it I talk about and videos with proper strategies, but playing with it will be, if the number is higher, your stop loss size will be bigger, but you will avoid being kicked out too often, as you can see, or you can tighten it down if you like more risky play. So this is all about moving averages, and in the next and probably the last video from introduction series, I will tell more about pivot points and sessions. So trade safe and enjoy the voodoo.